Hi guys, welcome to today's video, which as you can see there is based on the stock market and what we can expect running into the weekend. Now, if this is your first time here, please, as always, just make sure that you're comfortable with that before watching any further. Do not act upon any of these charts, do not take any of the analysis as fact, it is merely an opinion. Maybe to give myself a little bit of credibility though, I am registered with the CMT Association and I am working my way towards my chartered status at the moment. Technical analysis is what I'm widely known for, and hopefully you take something from this. But as always, if you enjoy it, please do subscribe to our channel. Down in the bottom right hand corner there should be a little subscribe button for you now, and let's just get into a few charts. Now, I think where I would like to maybe start off is maybe with the rotation graph. Now, I think what we understand at the moment is the market is very news driven. There's obviously lots of China headlines. I think yesterday was a prime example really of what is happening at the moment. Very news, as Trump would say, fake news driven media. There's a mountain made out of every little molehill, and it's causing a bit of a problem, a bit of an overreaction at times. But I think what we have to do is we just have to look at the market objectively, listen to what price is telling us, and hopefully, like I said before, you're going to get a bit of insight from this, because what we can see at the moment is obviously utilities and real estate are performing really well. What we can see here though is that there does seem to be a bit of momentum gathering pace with technology. Financials are starting to fall away. We've got small caps, which are, they've been in the bottom of the bin for the last few months, so they're not going anywhere. But also, interestingly enough, I am noticing that the Chinese stocks are starting to gather a bit of pace. So there's a lot of interesting things at the moment, and I think with the way the market is, I personally would never advocate jumping into full risk. That just doesn't make a lot of sense to me at the moment. If you're out there and you're fully allocated with your risk, I can only imagine the stress levels and what that looks like, trying to sleep at night, etc. That's not really the approach that I've got. I've got a very technically driven approach that is really based upon a time horizon of weeks to months. So I'm not day trading or anything like that. I couldn't think of anything worse. But what you should really look to do is just be super selective with the positions, because as we can see with the equal weighted index, we've had 4 consecutive weeks of declines so far. Now, there is still Friday to go. I fully expect there to be a major announcement either some point this evening, overnight. Something's going to happen, and it's going to either rebound the market to the upside or completely tank it, so that we do have 4 consecutive weeks of declines. Now, those are not characteristics of uptrends, as I highlighted the other day. I've been asked a lot if I'm bearish in the market, and the answer is absolutely not. I think what I'm really saying at the moment is you just need to be super cautious. There are very definitive levels in the market that you would want to observe in order to really follow through on any bearish thesis that you may have. And certainly, the S&P 500 equal weighted index, I think that would be a logical level to maybe get bearish. We've obviously got the S&P 500 SPY index. As we can see, we've got a huge decline in the number of stocks that are trading above their 200 simple moving average. Again, that's not great. So again, that's another little warning sign for us. We've obviously got the Russell 2000. As I said before, it's been in the bin for the last few months. And again, we just need to observe where the levels in the market are that we would want to just get hyper defensive and maybe look to initiate maybe covering hedged positions, etc. Whatever your chosen vehicle for making money to the downside, hopefully you've got a method in place for doing that. But the Russell 2000 absolutely I think warrants a bit of close monitoring. With that said, there are still stocks that are performing. Now, I have touched on this the last few weeks, just saying how there's been a run for cover to a lot of the household names, and Apple is absolutely one of those household names. I think what we are approaching here is a logical level where you might want to consider just tightening stop losses, preserving as much profit as possible. Absolutely, if the stock breaks out into new highs, then that's going to be opportunity for further upside. But if you're out there and you're currently in Apple, I think that level just makes a lot of sense. We also have Universal Display Corp. I've had a couple of messages on this stock over the last week or so, and yeah, I think this is a level that we need to be monitoring very, very closely. I think below this level, for me, all bets would be off. But above it, I think you can be bullish on Universal Display Corp. I think what we would view this as is a deep pullback at the moment. And as I said, very logical level of support that seems to be holding firm at the moment. But like I said before, that could switch on a sixpence at a moment's notice. By the time this goes out, the market could have absolutely tanked. So that's just the nature of the environment that we're in at the moment. And for those of you that are actively trading and are obviously allocating a lot of risk, then I'm assuming that you're comfortable with the risks that the market's presenting at the moment. There's not many professionals that I know that are comfortable at the moment. I'm certainly not comfortable. And yeah, I think Universal Display Corp, I think you need to monitor that one super closely. Lululemon is breaking out of a favourable chart pattern. I think it's very, very logical here that this is the level that you would want to keep an eye on. Around 205 seems logical. So if the momentum and the breakout holds firm, hopefully we advance towards 205 and beyond. But we are breaking out nonetheless. Match Group, again, I think this has been upgraded quite a few times this week, and I would be watching this level with a lot of interest. I think Match Group, this is the level to keep an eye on. If it rejects, depending on where you've maybe bought in, if you're somebody that's bought in quite high, I'm assuming there's a lot of stress with the position at the moment. But it does pay to understand where the danger zones are on the chart. And I think for me, that level with Match.com probably sits in around there. I think at that point, I would just say, do you know what? There has to be a point between now and zero where you want to just say you're done with a stock. Otherwise, your risk is effectively unlimited. So I think Match Group, that's absolutely a stock that you should keep a close eye on at the moment. KBH is a stock that I've highlighted a couple of times. It's not one of the, what's the word I'm looking for? It's not one of the sexy names out there. It's not an Apple. It's just one of those steady stocks that's performing really well this year. And it looks like we're getting a bit of a breakout there now. I think what we could anticipate with this breakout, I think we could anticipate probably a good 15% upside, provided this level holds as support. It has ran very fast, high and fast, so it does have the look on maybe the weekly chart of having the look of being a little overextended. We've obviously got momentum's quite high at the moment, so KBH, I think we just say we're bullish above 33.60, and with the hope that we move towards 38 there. Southern Company is a stock that's been performing really well for quite a lot of my clients in my group, and it just keeps trucking along. It's not really done anything for a couple of weeks, which I guess is pretty frustrating. But it's there. The trend is for all to see. It's obviously leader within utilities. You also have American Waterworks, which is doing pretty well at the moment as well. So I think if you want a bit of exposure to utilities, I do feel that those are the two companies that you might want to keep an eye on. Costco is approaching a profit target. I think once you get into this level here, I think it makes a lot of sense to just maybe think about tightening up stop losses, protecting as much profit as possible with a view with the market, obviously, if it breaks out above this level. The one thing that I have noticed, certainly over the last few months, is that breakouts aren't really working. I think for those of you that are out there and like trading breakouts, I like trading breakouts as well, but they're just not working at the moment, and that's just indicative of the overall market environment that we're dealing with at the moment. So I think it is supporting profit taking at the moment until the market starts to get a bit of traction and it starts to break out into new highs and starts to trend again. The market is 100% supporting identification of these target levels and looking to just preserve and protect the profits. HCP is breaking out, and certainly I think we have to be bullish above $36. I think that makes a lot of sense to me. There is a bit of room for this still to go. I think the uptrend is there for all to see. So I think HCP you could probably add to your radar. This is absolutely 100% the most messaged, requested, emailed about stock that I've ever had to deal with, Mr. Oroku. And I think it's very clear over the last few weeks I've been asking the question, look, is this a bearish flag or is it a rounded bottom? Well, I think we've got the answer to that now. The key thing is we didn't reach oversold conditions, and it does look like it's off and running. I do believe it's been upgraded after hours by a couple of investment banks, but how the market reacts to that is the key there. That doesn't mean that the stock is going to definitely move up, because obviously I'm sure we all understand sell the news, and we can absolutely see this decline before it advances. But I think from a technical perspective, I think that represents the analysis of best fit at the moment. Caterpillar, again, there's one individual that keeps asking me about this, and I think the stance is still the same. I think you need to just build your own chart for this, because it's a very simple chart to analyze and to keep an eye on. If you're somebody that doesn't understand charting, then you can stick around for a minute at the end. But for those of you that are maybe coming through on a Stock Twitch feed and you're interested in Caterpillar, bullish above this level and even more bullish above this level. But at the moment, the stock's doing nothing. There are far better opportunities out there. Coupa Software is close to breaking out. As I said a second ago, breakouts aren't really working, so it wouldn't surprise me in the slightest if we see a bit of profit taking here, or indeed a failed breakout. So I think if you're in Coupa Software and maybe you've got in low here, then you might want to consider this level as a logical area for profit taking, or maybe for compounding and initiating new positions. Facebook stance hasn't changed. I changed my chart on this around 10 days ago. I think this is the chart to observe now. I think we're still bullish above this level. Below it, not so much. PayPal, big question being asked of it at the moment. It's obviously struggling a little bit at the $100 level. I think this might be a concern. This should be a bearish signal. Now, it's a bearish signal that it's not massively reliable, the 50 MA crossing the 200 MA, but it is a bearish signal nonetheless. Many traders do trade off it, so don't be surprised if there's a decline in PayPal in the not too distant future based on the technicals. I think that's the concern if you're out there and you're bullish on PayPal. Restoration Hardware, RH, broken out recently, and it's moving sideways, but it does look like it's starting to gather a bit more momentum again. So for those of you that maybe like the stock, you're looking at it quite closely. Then that's the views on RH at the moment. Shopify, again, highlighted this one 10 days ago and just said this is the level to watch. Lo and behold, we've got the support there, completely logical level of support, and off it goes. This is the target for Shopify. Obviously, I think it's key to say that we obviously need the overall market, I think, to participate. There's some stocks that are working at the moment, despite what the major indices are telling us, and that really just says to you that, and says to me that we just need to be super selective with the positions, and just choose the ones that you're comfortable with and the ones that are still working. I think that's the key here. Starbucks is causing a lot of problems, I think. We've got this is a log chart. I think that's the other thing to say. And since we've broken below this level of support, it's not been able to gather that momentum to come back in and shift it up. So there's a big concern with Starbucks at the moment. And I've said it a million times over the last couple of weeks because I've presented this chart a few times now. I love a Guatemalan blend just as much as the next guy, but at the end of the day, if the stock price is not paying you, then I don't see the point in holding on to something that's not paying. I've got a very logical, systematic trend following approach, and Starbucks unfortunately is just no longer appealing. I think above this level, yes, it was appealing once upon a time. Unfortunately, all good trends come to an end, and that's just the unfortunate nature of the market sometimes. I think we've got STNE here. STNE. I think this is the chart of best fit here. I think we're bullish above this level, and like I've highlighted before, I think this is a logical level to just keep an eye on, to observe, and potentially look to extract some profits. We've got Trade Desk here. Now, those of you out there in Trade Desk at the moment, I highlighted this weeks ago and just said that this is not a place that we want to be allocating risk. I think the thing's plummeted about 20% since that. Now, what we've clearly got here, we've had a breakdown, but I think this is a level to watch. It must be really frustrating because for those of you out there in Trade Desk, you'll be watching the market essentially go up over the last couple of days, but Trade Desk just hasn't caught a bid. The problem that we also have is we've recently reached oversold conditions, which is a bit of a problem as well. So absolutely, I think this would be the line in the sand for me. I think below 173, I personally would maybe look to short it. But, at the moment, buying, I don't really see it at the moment. Now, that essentially concludes everything that I really wanted to go over with you. As I said, if you did enjoy it, please subscribe to the channel. If you want to take it a step further, go and jump on to our website, honeystocks.com. There's a lot of incredible free content on there, but if you're somebody that maybe struggles with your trading and you want to maybe explore a new style, maybe you want a bit more consistency, etc., you should check out our website. But thank you very much for watching, and I'll maybe see you on the next video. Thanks.